Hey, economic warriors. Buckle up, because today we're diving headfirst into the glittering dumpster fire of global economics, where gold hits $3,000 an ounce, consumer confidence is in the toilet, and governments are playing tariff roulette like drunk casino patrons. I'm your host, the guy who's here to call out the madness, expose the mismanagement, and roast the policymakers who think golden age means economic Hunger Games. Let's get into it. Oh, ladies and gentlemen, grab your popcorn, because Donald Trump's prophecy of a golden age has arrived, at least if you're a gold bug hoarding shiny metal in your doomsday bunker. Gold prices just smashed through $3,000 an ounce, historic first, and the gold bugs are dancing like it's 1979. But before you rush to pawn your grandma's jewelry, let's talk about what's really driving this rally. Spoiler alert, it's not because Trump's economic genius is raining prosperity on us all. No. It's because the world economy is a hot mess, and central banks are panic buying gold like it's the last roll of toilet paper in a pandemic. Why the frenzy? Well, let's break it down, point by point, from the surface glitter to the deep, dark economic abyss beneath. First, central banks worldwide are on a gold buying spree, stockpiling the yellow stuff faster than you can say, geopolitical meltdown. According to the World Gold Council, central banks bought a record 1,037 tons of gold in 2023, and 2024 is on track to surpass that, with countries like China, India, and Russia leading the charge. Why? Because they're terrified of relying on the US dollar as the world's reserve currency when Trump is out here threatening tariffs on everyone, friends, foes, and even the neighbor's dog. The dollar's dominance is under siege, and gold is the lifeboat in this stormy sea of uncertainty. But wait, there's more. Trump's trade war antics, slapping tariffs on allies and rivals alike, are sparking retaliation faster than a bar fight on reality TV. Just this week, the European Union announced plans to impose counter-tariffs on $20 billion worth of U.S. goods if Trump follows through on his threat to hit European cars with a 20% tariff. Meanwhile, China is reportedly mulling a rare earth metals export ban, which would kneecap U.S. tech and defense industries. This is less golden age and more global economic cage match, and gold is the only asset laughing all the way to the bank. Now, let's zoom out. Gold has always been the ultimate barometer of fear, a centuries-old safe haven when the world goes haywire. And boy, is it haywire right now. The IMF just slashed its 2025 global growth forecast to 3.1%, citing, you guessed it, trade tensions, geopolitical instability, and policy uncertainty. Back in 1980, gold hit an inflation-adjusted peak of $3,800 an ounce amid weak growth, runaway inflation, and Cold War jitters. Sound familiar? Analysts at Goldman Sachs predict gold could climb to $3,500 by mid-2025, driven by the same toxic cocktail of economic fragility and government mismanagement. So, Trump's golden age might just be a gilded panic attack. Now, let's pivot from the glittery heights of gold to the smoldering wreckage of U.S. consumer sentiment. According to the University of Michigan's latest survey, consumer confidence just cratered to 57.9, its lowest level since November 2022. For context, a reading below 60 signals serious distress, think I'm hiding my money under the mattress, levels of panic. And what's driving this nosedive? Surprise, surprise, it's Trump's tariff war, which is about as popular with consumers as a root canal without anesthesia. Here's the kicker, long-term inflation expectations among Americans just jumped by the most in 32 years. Why? Because tariffs are a one-way ticket to higher prices. When you slap a 25% tax on imported goods, everything from German cars to Chinese electronics, those costs don't magically disappear. They get passed on to you, the consumer. The National Retail Federation estimates that Trump's proposed tariffs could cost U.S. households up to $7,600 annually in higher prices. And guess what? 48% of survey respondents spontaneously mention tariffs as their top economic concern. That's not a policy debate, that's a cry for help. Joanne Su, director of the Michigan survey, summed it up perfectly. Frequent gyrations in economic policies make it very difficult for consumers to plan for the future, regardless of one's policy preferences. Translation, the government's economic whiplash is giving us all financial vertigo. And this isn't just a U.S. problem. In Canada, newly sworn-in Prime Minister Mark Carney is already sweating bullets, trying to negotiate a truce in the U.S. tariff war. Good luck, Mark, you'll need it when Trump's tweeting tariff threats at 3 a.m. Now, let's talk about Wall Street, where the only thing more volatile than the markets is Trump's policy flip-flops. Just this week, the S&P 500 plunged 10% from its peak, triggered by, you guessed it, Trump's on-again, off-again tariff threats, recession fears, and the looming specter of a U.S. government shutdown. But hey, Friday brought a 2.1% rebound, because apparently, a just okay day feels like paradise after a week of economic Armageddon. Investors are buying the dip like it's Black Friday at the Grand Canyon, but let's not kid ourselves, this is a band-aid on a gunshot wound. And it's not just the US. Across the Atlantic, German bond yields are surging as the government scrambles to fund a massive defense spending package. Why? Because Europe is bracing for Russian aggression as Trump cozies up to Putin and abandons NATO allies. German conservative leader Friedrich Merz just brokered a deal with the Green Party for a debt-funded spending spree on defense and infrastructure. According to Bloomberg, this package could exceed €50 billion, funded by bending Germany's sacred debt break rules. Gee, nothing screams economic stability like borrowing billions to prepare for World War III, right? But wait, the economic clown car isn't full yet. Let's take a quick world tour of government mismanagement. First stop, Argentina, where President Javier Milei's grand plan to tame inflation is going about as well as a paper umbrella in a hurricane. Inflation just spiked to 2.4% in February, despite Milei's move to slow the peso's depreciation. The central bank thought it could cool prices by reducing the currency's monthly slide from 2% to 1%, but surprise, domestic prices are still rising, and the trade balance is getting crushed. According to Bloomberg, Argentina's exports are losing competitiveness, setting the stage for yet another devaluation. So much for Milei's economic miracle. Next up, China, where the government is so desperate to fix its $4.6 trillion mutual fund industry that it's proposing to slash fund managers' pay by 50% if they underperform their benchmarks. This is part of a broader struggle to stabilize an economy battered by slowing growth, a property crisis, and, yep, Trump's trade war. The Financial Times reports that China's GDP growth is projected to dip below 4% in 2025, a far cry from the double-digit glory days. But sure, let's blame the fund managers instead of, say, the policymakers who spent decades blowing asset bubbles. And finally, a quick pit stop in Hong Kong, where billionaire Li Ka-shing just raised Beijing's ire by selling his control over Panama ports to appease Trump. Beijing is fuming, but what can they do? Li's just playing the game of survival in a world where Trump's tariff gun is pointed at everyone's head. So, what's the common thread here, folks? From gold's record rally to consumer despair, from Wall Street's whiplash to global trade wars, the root cause is the same, government mismanagement on a scale that would make a soap opera blush. Trump's tariff threats are destabilizing global trade, crushing consumer confidence, and driving inflation fears to levels not seen in decades. Central banks are hoarding gold because they don't trust the US dollar, or the US government, to keep the world economy on track. And across the globe, policymakers are scrambling to clean up the mess, whether it's Argentina's inflation spiral, China's economic slowdown, or Europe's defense panic. Here's the harsh truth, this isn't a golden age. It's an economic recession in the making, fueled by reckless policies and geopolitical brinkmanship. The Congressional Budget Office now projects that U.S. GDP growth could slow to 1.5% in 2025 if tariffs escalate, while the Federal Reserve warns of significant inflationary pressures. Meanwhile, the World Trade Organization estimates that global trade volumes could shrink by 1.2% next year, the first decline since the pandemic. And let's not forget the human cost, millions of consumers, workers, and businesses caught in the crossfire of this economic Hunger Games. So, what's the takeaway, economic warriors? It's time to call out the clowns running this circus. Trump's golden age is fool's gold, a shiny distraction from the real economic carnage his policies are unleashing. Governments worldwide are failing us, prioritizing political theater over sound economic management. And us, the ordinary folks. We're left holding the bag, paying higher prices, weathering market crashes, and praying the next policy flip-flop doesn't tank our savings. But hey, don't take my word for it, look at the data, follow the money, and see the chaos for yourself. And remember, here at Boss Economics World, we're not just here to satirize the madness, we're here to arm you with the truth, so you can fight back against the economic Hunger Games. Until next time, stay sharp, stay skeptical, and keep roasting the clowns in charge. This is Boss Economics World, signing off. Oh, and if you're hoarding gold, congrats, you're winning the Panic Olympics. For the rest of us, it's time to demand better from the policymakers who got us into this mess. Peace out.